to get started here is to think about Jay Gupta. Did he do a lot of planning to get started in this business? Sorry? Instinctive, reactive, just try stuff, right? See if it works. Is there anybody in the room that's like that? Right. Okay? So what I'd like to do is trace his journey through time, if we could do that, okay? So he started off with what you might call a plan A, right? And what was plan A for Jay? Raja? What was his very first plan, or experiment, or whatever you want to call it? What was the first one? Exhibitions. Okay. So he started off with exhibitions.
And I ran it for, I think, 4 days, and then 3-4 weekends.
Yeah.
So,
okay. So by doing this, did he learn anything?
yes.
What did he learn, Swatika? Use your mic, please.
Okay. It helped him to find out what were the fast-moving brands, or in other words, the taste of the customer, which was kind of very important before he invested onto it later on.
Okay. He understood something about customer taste. Which are the fast movers? Did he learn anything else? Pricing. He learned something about pricing. Anything else? Conversions, turning footfall into paying customers. And he learned something about suppliers. Did he develop any capabilities that after this exhibition he had that he didn't have before it? Confidence. I'm not sure that's a capability, but he certainly developed some confidence. Something about marketing. Yeah? What?
John, he also?
Microphone, please. This was his first job, but did it develop any?
He bought the place. He realized retail, the location is most important.
Okay.
And he bought that place.
Okay, so location. He learned about locations. He learned about marketing.
One more thing that he learned about is that if he's moving to the store format, what kind of merchandise he should be storing. So
Well, he's just at the exhibition stage here.
exhibition gave him the idea.
Yeah. Okay. So some good things happened, and then he did another plan, right? After the exhibitions, what did he do? What was next?
Store.
Casual Plus,
Casual plus.
right? And that was multi-brand. Any lessons from this phase of the business?
He realized that all the top brands would not give their brands immediately out to him for the outlet, and he had to prove himself at Plan B. So that was a challenge that he learned.
So top brands are hard to get. Yeah?
Because of his inexperience, they're not able to give him the
The franchise.
franchisee.
Exclusivity that he was looking for.
They were not tied up with him because he was inexperienced.
Okay, yeah, okay. So hard to get, they wouldn't tie up with him. Any other lessons from that?
Negotiating good terms was very important
Aha. So terms are important
with suppliers.
with suppliers.
And paying them on time is a very trust-building exercise.
Okay, so there's a capability they built there, perhaps negotiation skills. How do you deal with vendors to get the terms you want?
And employees also. Employees.
And,
How to motivate them to,
yeah,
or incentivize them.
There were also some other demands from customers, like, and
okay, so
exchange room and,
He understood
They want-
behavior better.
some different demands of customers. They were having some complaints also regarding the
the damage in the product and the exchange room and some more price discounts,
Exchange, they want discounts,
replacement even if
replacement,
No seconds material.
no seconds, just give me the good stuff. So firsts. Okay, so as a result of these lessons learned at Casual Plus, what does he do next?
Factory outlets,
Factory outlets, which are multi-brand?
single brand.
No, single brand, right? So he's on Plan C, factory outlets.
John, one more thing for Plan B.
Yep.
His payment to the vendors, which he was trying to make on time, and this kind of developed trust between him and the vendors. Somewhere this is mentioned Lee Cooper.
Okay, so he learned how to build vendor trust.
And they also gave him double the
What was
space.
the key lesson for how you do that he learned?
Timely payments.
Pay them on time. It's not
Build
rocket
the trust.
science, right? But it's really important, okay? And you build trust, then they give you terms. Okay, so we got to Plan C. We're going to build factory outlets. We build ultimately, what, 4 of them? Single brand stores. Are there any lessons, new ones, learned here?
So,
Rajesh?
the lack of facilities like trial room, which consumers expected to have even in factory outlets, but he had not planned for it. The experience was not there.
Trial rooms, better experience in the store.
Yeah, better experience. And I think the price was also discounted, so he thought it made up for these shortfalls.
Okay, customers want this, but pricing in some sense resolves all that. Yeah, I want that, but actually give me a discount, I'm happy. Yeah?
He learned that in this format, the
Yeah.
sales is very high per square feet, but the gross margins are lower.
Sales high, gross margin not so high. Yeah? Any other lessons from this?
He also realized that large range of products are preferred by customers.
Large range of products. Okay? Let's see, that's here. Okay, so were there any additional,
Here instead of buying on cash, he started taking on consignments, taking goods on consignments. Like he changed from buying on cash earlier to taking goods on the consignments in this.
yeah, okay.
He used to also take cash discounts.
When did he first do that?
He did it in his exhibition thing itself.
Even the exhibition.
At the exhibition, he did that first.
Casually he did it.
Yeah?
Then those are, he
Exactly.
continued doing that. Yeah, he continued doing that.
Continued to.
Kept doing that, okay.
Only at the loot he deviated.
So, any new capabilities developed here?
We learned one more thing, that discounts work. If you have very steep discounts, even if you're not offering a lot of good things, customers are ready to forgive you for that.
Okay, we said that.
Scaling up, he opened 5 stores of the same format.
So we learned something about scale. I don't have to just have an exhibition or one store. I have multiple stores, and I can manage just me and some people I hire. I can manage multiple stores. So these are the beginning of Jay's, shall we call it, management skills, doing by managing rather than just doing oneself.
Here he learned that he learned the people trend, what exactly the people want. The people want to go for the brands, but they want to go for these brands at a discounted price, and also they want to have the experience of like a branded store. Like they want to have the trial rooms, they don't want to have the seconds. So all these things, all these lessons he learned while he was doing this. And then finally came out with the other the concept what Loot is all about.
Yeah. So with all of these accumulated lessons, then what does he do? He says, gee, if I do Loot, I can give him all of these things. So he did one store, right, first? So plan D. Didn't we actually skip a plan?
Yeah, between B and C.
What did we skip here?
The promote the
Single brand full price stores,
Exactly.
right? Which came in here. We'll call that
Yeah, between B and C.
B and a half. Okay? So he does Loot number 1, and what does he learn here?
If there are good discounts, then you definitely have that buyers.
Discount throughout the year.
If you have full discounts, like high discounts pull up customer. So that's one thing that he learned.
Okay.
And he gave the discount on ideally all products that he was holding in his store.
Variety, sorry. No,
I'm sorry?
variety. Shopping experience count.
Good.
Variety, different.
Oh, variety. You learned about variety, yes. Much more variety here. Whereas here we were single brand. Now we're multi-brand, but also discount. Yeah?
He learned that people wanted quality and not just seconds.
First quality.
And I think that aligns with a shift that he saw in the behavior of the customer, where he said the customer is becoming more quality conscious, more sophisticated, just the way the market was developing.
The Indian customer
Returns of the goods are accepted.
is changing, right?
Yeah,
The
exchange
customer I
policy.
saw years ago at my exhibitions, the customer's different today, right? Growing middle class, more aspirational, wants more things.
He also put in money in marketing.
So how did the first Loot store do?
Most importantly, he built a brand
Keep-
for himself.
Microphone, please.
He built a brand for himself. That is the most important. First time he is building his own brand.
Was his brand, not somebody else.
Not
name
somebody
on the
else.
store. Okay, so brand. Okay, and how did it work, the first Loot?
He did really well.
We did 40 lakhs in 2 months, so it really did well.
Way better.
Essentially a multi-brand discount format,
Yeah,
which gave him a lot of.
much better volume. 45,000
And
in 2 months.
he did
Twice the best of his earlier stores, right? So what did he do? By the end of October, he flips
Majority of
almost all his stores
format.
to the Loot. This is going to be fabulous, right? I have discovered Nirvana here, right? Yeah? Okay. Could we step back now and take a critical look at Jay's approach through this journey, okay? Because some of you will be on a journey like this. Some of you have been on journeys like this, right? Why did he choose this approach? This just try stuff and see what works and react and so on.
Less risk.
It's less risky to try that approach.
Less risk because he knows and he's growing at his own pace.
Okay, so you argue it's less risky.
Because he was evolving. Every time he would learn and then he would put his learnings into the next and he was with live with what's happening around him. So he was seeing market opportunity, he was grasping it. That's what he was doing. He was evolving every moment.
And was learning important for somebody like Jay?
Yes.
Suresh, why?
Because he has to adapt himself to the requirement of the customers according to their tastes and preferences.
Yeah, and Gary?
Hands-on
Microphone, please.
He's a hands-on entrepreneur. He's not planned it all out.
You didn't plan this out. Did you
Yeah, so
sit
he's
at the
hands-on,
beginning
as
there
in
and say,
how he
here's
learned.
what I'm going to do? He didn't at all.
when he-
Why didn't he?
He did never did the opportunity evaluation to see exactly whether his model can survive 2 years.
He was
Still his own business, like when he actually did like the discount, this gave out this Loot idea, he was actually killing his own idea that he had earlier, where he was, giving out stock with no discounts, so he's killing his own business.
Okay, that's one reason. Another, Harsha?
I think it was about cash. As his revenues grew, so did his confidence,
Yeah.
and probably it tipped over to being overconfidence.
So at the beginning, he had no cash, right?
Therefore, he had to do exhibitions.
So he had to start with exhibitions. What else didn't he have?
He didn't have customer knowledge. He had not
He
handled
knew
it.
nothing about these customers. Well, he he had some insights, but no evidence.
No evidence, yeah.
Yeah?
And he had
What else?
Initially, he got the immediate results. Whatever he tried, initially he got the results, and then he continued moving on the same direction, and then he got some problems. I mean,
So
you know,
try something, learn.
yeah.
Try something, learn. Try something.
He did not have
learn.
experience.
And
He did not have experience.
He had no experience as a retailer, right?
Yes, but the minute he moved to Plan B, he had his experience. He knew what he's capable
Well,
of.
he had a little, and then he got some more. Now, if you'd been in retailing 20 years, would you have done it this way?
Would you?
Maybe not. You'd have said, aha,
Least 20
I've
years.
learned a lot of these things, so here's my plan.
Yeah, there's also another thing. I think he was applying the wrong lessons to the wrong project. I mean, when he went into Plan D, he was applying the lessons he'd learned in Plan A and Plan B, which perhaps were the wrong lessons to apply.
Maybe.
And I think he had
So
like-
do we make mistakes as entrepreneurs?
Yes, we do. And what we
Oh, you
tend
made
to
some
do-
too.
Yeah.
But John, what he was learning basically about the customer, he started understanding the customer, what is this Indian middle class looking for, you know, under one roof, multi-brands that were discounted throughout the year. And it was like the family, the youth of Indian market. So he started resonating with them, which made him maybe come out with all these kind of formats.
and he concentrated more on the customers, but he never bothered about the cash management, and that's exactly what happened in the last stage. He
Yeah,
realized that he
because,
was
you know-
he had huge overheads, and he hardly had any liquid cash. So he was happy building his empire without understanding what his revenue
Serving
constraints
customers.
were.
Customers want it, I'm going to give it to them, right?
Yes.
Surely it will work out.
Yeah, John,
Right.
the way I would look at it, here, Chandu, behind. The way I would look at it, I think in a strong wind, even a turkey can fly.
In a strong wind, even a turkey can fly. You say
he had a
taste
lot
a
of
turkey.
problems.
Thanksgiving is far away, but no, I think what happened is he was unfortunate as an entrepreneur that he didn't have failure
Yes, yes.
in many of his initial stages. So since he didn't stumble, he became a
Things
little,
worked pretty well, didn't they? Yeah.
things worked out well,
Yeah.
and like in many other cases, things work out well. For certain people, because they're in the right place at the right time. If you are a mobile operator, say,
And was
12
he-
years
was-
ago,
Was he at the right place in the right time? as
He
it
was.
turns out? He was.
he was.
Exactly.
So that's why I
Yeah.
said, sometimes the context or the circumstances make you who you are, but you think it's because of you. I think that
you're so
locus of this
smart.
thing about
Yeah.
external, you internalize success, externalize failure. Many times that happens with many of us as entrepreneurs. So I would say you have to be cautious about some of those things.
Okay. So are there any advantages to this approach that Jay took here as opposed to what we might teach in a business school?
There's advantages if the format and the industry isn't, or if it's new and evolving, right? If it hasn't been done before, if retailing wasn't understood and completely new market, then you have to try and experiment because you can't rely on lessons learned in the past. They don't exist. But I was having a conversation yesterday with Sridhar, who has about 20 years of experience or more in retailing, and he said, one of the simple formats and most fundamental basic.
There's a retail group.
Yeah, and you too, I'm sure. But I didn't have this conversation with Sridhar. He said, in retail, the best way to make things work is that you have to get profitability at every store. And I think it's a fundamental lesson that every person who gets into retail should
On a
know.
philosophical note, when I talk about risk and governance in some places, I say the biggest risk is not taking a risk. So what Jay did was by intuition. He started his exhibition sale. So that's the quality of an entrepreneur. I mean, you don't really start if you don't want to take risk. Then you might as well not do any business, sit at home. So fundamentally, he took risks and he created new formats. As he learnt along the way, he evolved. Obviously, by the time he reached Plan B, C, and C and D, he has figured out what it is. I have to make a disclosure because when Jay was doing this in Loot, we were looking at acquiring it at some point in time, and we said no. That was the first shop, the Loot shop that he started in Phoenix, and yes, it was a great format. The first 2-3 months he really did extremely well. But fundamentally, a steep discount on multi-brand, it's a discount format retail. Multi-brand retail is essentially you don't make that kind of margins. And as you see in the case studies, inventories, is overheads, etc. piled up. It's all about consolidating your back end before you really start moving front end. And that's some of the lessons that you would have learned, and that's why it closed down and stuff like that happened.
So Sridhar, let's not get ahead of ourselves here, but I think it'd be good if we could take a look at the Loot business model now that he's flipped all his stores, right? So let me pass out some numbers with you that use the same tools we used yesterday. Yeah. Go ahead. Wait, just one sec. And I'd like us to kind of work through these numbers and get a sense for whether this business model is really working. Okay.
Well, I think we've spoken enough about customer insights. Without having been done all this, he would have made supply chain linkages on one end.
Yeah.
He would have kind of really learned why he was doing businesses and creating those relationships, which were very, very important.
So it's kind of chicken and egg. You can't do this, you can't do some things if you don't have customers, but yeah.
Going back to the approach, I think Jay's approach is like one of the best approach for entrepreneurship. Now, the result may be different, but in terms of going...
You like doing it.
Absolutely.
Yeah.
And I subscribe to that. Barring aside, of course, some disclaimers depending upon the nature of business and the industry, but this is one of the finest approach, in my opinion. You take a small step, experiment, decide a go, no-go, go to the next one, decide, validate your results, go to the next one, and so on. At plan D, he's again at go, no-go situation. So it's still an experiment, and he has a choice whether to come back to plan C or to evolve maybe plan E in this case.
Yeah.
But the approach is good.
But you like the approach? Yeah.
In some sense, it's probably a little scientific as well. Take some small experiments, keep changing one parameter at a time, make short experiments, get results, and keep moving on. Something very, very similar what we also followed in my own startup, but it didn't end up the way that Loot ended up. So
let's look at the numbers. If we can get this to come on, here we are. Okay. So this is the same piece of paper. I wonder how we turn this off here. Is it this one? Yeah, there we go. Okay, so let's look at these numbers. Do you have the same piece of paper that I have here? Yeah? Okay. And notice that I've done the common size analysis for you, right? Okay. So what does it tell us? First of all, I want to think about this business model in 5 little buckets. The revenue model, the gross margin model, the operating model, the working capital model, and the investment model. If that's Greek to you, it will become clear as we work through this. Is the revenue model working here? That is, are customers coming and buying what Jay has on offer? Harshad?
Yes.
Okay. What does the P&L tell us? Of sales per store, it was 3.8. I'm sorry, I can't speak very well in lakhs and crores.
It's 3.8 million,
Okay.
yeah.
3.8 million, you know how many lakhs or crores that is, right?
So it's 8 million.
Okay. It's gone from that number to that number per store. Does that look like the revenue model's working pretty well? Double, right? Okay. So customers are happy. What about the gross margin model? I'll scroll down a little bit, but you have it in front of you. Is it working or not working? Let me ask it differently. Is it working as well as before? And in terms of absolute amount of gross margin, what have we done per store? We were at about 1.2 million rupees per store before. We're now at 3 million rupees per store, roughly, right? Okay? So we're getting a lot more sales and a lot more gross margin. Now, those of you who are in service businesses, do you see why yesterday I was pushing you to figure out what your cost of goods sold really is? Because you want to know if there's money going to be left over to pay the other. Okay, so the gross margin model is working, the revenue model is working. How's the operating model? That is to say, all the other operating costs of the store. It's gone from 33% to 37%. Yeah? So that's less good about this new format, right? Okay? So welcome to the world, right? You make one thing better, but another thing gets worse. That often happens. But the net, if we look at profit, has gone from, where are we? Profit before tax of,
That's improved.
it's improved sharply. Notice on this line here, there's some other income. So we don't want to get too fooled by the other income. We don't know what that is. It's rent from some of Jay's real estate that he owns in other stores that he's renting out. We take tax off. Okay. Now, so is the P&L working?
Yep.
On balance, the trade-off appears a good one, right? P&L wise. But what haven't we looked at yet? Cash and the balance sheet, the whole balance sheet side of it, okay? So if you flip to your next page, we're going to do the cash days, and notice at the bottom of the first page, I calculated my daily rates here, because we're going to need them to do the cash days, right? Just like we did yesterday. Okay, so if we go to your second page, okay, let's see what the next page tells us. Okay. First of all, has it taken some cash to build this thing? No, what's happening here? Share capital's gone from 1 million to 4 million rupees, right? Okay. So he's put in more money. Secured loans from directors gone from 1 million to 10 million. So he's had to feed this thing with a lot of cash. Do you see that? Okay. Now, if we do our cash days analysis down here, what about inventories? You can see I did the calculation for you. How do you feel about 213 days of inventory? How do you feel about that?
Bad. It's
Pretty bad. Why? Pretty bad.
Inventory is actually going way above what it was.
Yeah?
Yeah, in number of days.
Okay.
Not in absolute
It's too
terms.
many days. It's
many days.
7 months worth of inventory.
Right.
But why is that bad, Pallavi, in this particular business?
It becomes obsolete.
It's a fashion business. Does fashion change? Okay. And what is he buying here? He's buying the manufacturer's closeouts, which is what?
He's actually buying the excess production done by these brands.
Surplus. So he's buying the dogs already. Yeah? And
Unable to sell.
he's got 7 months worth of them on his books. So you're a little worried that inventory's gotten out of whack? Okay? It's gone from 136 to 213 days. Now what about creditor days? Okay? That's gotten a little better, right? Yeah? Gone from 82 to 127, so that's at least financing some of this. How do you think his creditors feel at 127 days?
Very insecure. They were comfortable with him because he was paying them on time. Now he's not paying them on time.
Now he's paying late, apparently,
Yeah.
right?
Yeah.
I wouldn't think that 120-day terms would be the norm, right? Okay? So what has to happen? How does this have to get funded? Either by the banks or by loans from the shareholders, which is what happened. Okay? Yes. Viraj.
He's buying a lot of things upfront in cash. Right? How is
Well, what does the balance sheet tell us he's doing?
yeah? So I mean, what's written and what's there in the numbers is like opposite.
What do the numbers tell us?
The creditors have gone up. Creditor days have gone up.
It doesn't look like he's buying with cash anymore, does it? It looks like he's asking for credit from his vendors. 127 days worth of credit, okay? So part of this flip has been to say, yes, Mr. Vendor, I can move a lot of goods for you, but I now need terms.
Right.
Apparently that's what is happening, right? That's what the numbers tell us. Okay, so he's had to raise a bunch of equity, thank you. And do that. Okay, now, if we go to the third tool we learned yesterday, next page. Where is the cash going? Do you remember we did that? We took our two balance sheets, lined them up, and calculated the difference? Okay, so what do you think? First question, those 213 days worth of inventory, do you think that's all saleable at the price that's on the books?
No. If you further discounts it, yes.
He might have to further discount it. How much would you guess he might have to discount it? Who knows, 70%. Woo! 50%. If you discounted the inventory, what would it wipe out?
Profits.
Your profit. What's the size of profit compared to the size of inventory here? Profit is very small. If that inventory is overstated by just 10%, what happens to profit? It's gone, right? It's gone. So, is the business model working?
No.
Guys, we have a profitable business, but is the business model working? It's not. We have to fix it, Swatika. Okay, so at the end of the case, he's facing some decisions, right? There's a decision about, do I buy those new jeans? There's a decision about, do I pay my salaries? Do I open the new store that's available? So what do you think? Raja, if you're Jay, what do you do about these things?
There is a temporary, or there is a plan B failure, and obviously financial change. But having said
That I would, if I were him, I would possibly try to, arrange some funds and change my plan D to plan E and do something which possibly is a better, business model. I know a lot of stuff. I have a lot of experience. I built a brand. I know a lot of, I have knowledge of people. Fair enough. Right now I made a mistake, but I need to undo this and restart with some way to fund myself for.
Okay, so you have some sort of long-term strategic decisions to make.
Yes.
But there are also some short-term decisions
Yes.
to make. Do I buy the jeans? Do I open the store?
Yeah. No.
What do you think?
No.
Raja?
No. No.
Don't buy the jeans.
Don't buy. Don't buy.
Ravi?
no stock.
No more stock.
No more stock. We got enough stock, 213 days. Now, we might be out of the good stuff, right? And have the bad stuff lying around, but still, Ravi,
But it's going to,
make them buy the bad stuff.
True.
Yeah? But they won't buy it because... You don't think so? Okay? But a couple questions here. Why is inventory so high, do you think? What are the possible reasons why
I
it's
think
that high?
his managers.
Poor selection and it's just unsold and it can't sell. That's one explanation. Are there any other reasons?
He needs to buy in bulk. He needs to buy in bulk.
He has to buy in bulk, so he's stocking
John,
up
there is one more.
and he gets opportunistic purchases and he buys ahead. That's a
There's one more
possibility.
reason.
What else?
All the time we're saying that he has understood the customer very well, and that's why he has changed so many formats. But at a given point of time, he left this decision to his merchandisers, that what order to make. So maybe they don't understand customers so well as he understands. So he left that to their decision ability, and I think this is something caused a lot of trouble for
So
him.
that's another reason why the inventories might be too high. Okay?
Wrong
They are too high. Yes.
Wrong
Very
products
nice.
at the wrong place.
Pardon?
They would have the wrong stock in the wrong shop because they had so many stores.
Might be. Maybe what sells in Nasik is something different than sells in Mumbai.
Across India.
Yeah. So lots of possible reasons why it's too high, but it is too high.
He's
So there's
also,
the long-term decisions that Raja said we have to face, but they're the short-term decisions. So I heard a couple people say, don't buy new jeans, Okay, what about opening the new store?
No, you can buy, don't open the new store, but you could buy the new jeans. Because one store is not going to change your life, because you already have 10.
So forget about the new
the
store,
old
save
store.
that cash.
Instead, get some new fashion so that you will get footfalls, and then you can give a big discount on your old inventory.
So Harshad wants to buy the new jeans,
Buy new jeans.
but Ravi, you say no. Who's right here?
Now,
Satish, who's right? We disagree here.
John,
You go with Harshad, why?
Then at least you can, yeah, because at least it will start if he tries to set up the new product.
Then he can offset the losses by having higher margins in the new product and then selling the older products for the discounted rates.
But he can still give discounts on the existing product, right?
Yes.
Rather than, nobody would know that you got new stock. So you can always still give a discount and take out the old stock, rather than bringing in new stock and holding you're having a cash. More cash.
But then I think we'll not be able to pull in the crowd. If we follow what Mr. Ravi said, we'll probably not pull in the crowd because people have already come in and they realize that they're not happy with the products. But then if you want the customers to...
People aren't happy?
Not happy in the sense
Sales are good, right?
So then you're left with the remaining goods. Probably in another 6 months nobody would turn up.
No, here the assumption is that he's just picked it up a lot more because he's getting an opportunity to buy stock at a good price. But we're just adding more to it. The 217 will probably move to 230, 240, whatever.
John,
right? That will keep increasing, so you're...
John, so this is a very difficult decision Jay faces, right? And reasonable people here disagree about what he should do. Okay, that's the short-term decision. What should he do about the store, and what should he do about stock? What should he do longer term? The business model isn't working.
I think he needs to do this change.
Less. He should definitely buy the new stock, but less of it.
Yes.
But that's a short-term decision. How does he fix the business model that's not working? Yazdi.
Long term, since he has already built his brand, he can also go for the franchising model. He can franchise his brand to others.
I think he should also look at experimenting with multi-formats back.
Yeah, he should change
Loot and maybe some other discount brand model.
So try something else.
John, one of the things that you might the issue that he needs to fix is the gross margin level. And one of the things that he could experiment...
Is it just gross margin?
No, I mean that's one of the things that is one of the drivers that is impacting a lot of other factors. And one of the ways in which he will, because in the trading business there's a limit to how much he can do. One of the things that he could do now that he is given a brand, now that he has a reasonably recognized brand, is to perhaps consider private labeling, which will allow him maybe 200-300% gross margin on those brands at least.
Okay. Start making goods yourself.
And I
maybe
think
you
when
can improve your margins by doing
I think when we change,
What?
like when I think there was somebody who said we should change to Plan E or something, but then we'll have to be very careful about it because we've already created a vibe within the customers that loot is all about discounts. So you can't totally take off all the discounts and tell them we're still looting, not possible. So we have to be very careful about that, and we really have to do a lot of thinking about
Okay,
that.
so here's what I'd like to do. We could discuss what he should do. Let me pass out the B case, and you'll see what he did.